Awesome. Well, welcome everybody. Price Headley here, BigTrends.com. Thrilled to join everybody on the timing research market and stock view today. So pop in your questions on stocks you want to look at. I'll pull them up here. I think it's useful to kind of give you a little overview on kind of my approach, the big trends way to doing things. And a lot of it goes back to kind of looking at things in an unusual way. You don't want to look at things the way everybody else does. As you know, the majority of traders and investors don't do so hot, and it's because they're overreactive. Fear and greed gets in a lot of people's way. They buy too high, they sell too low, all that kind of stuff. So we want to kind of get away from that and get to a little bit more unconventional view that I think can help guide you when some unusual trends are working that you want to let keep working. Obviously, you look at what the market's done this year in 2025, and it's been kind of the tale of two markets, right? We had the big sell-off. Here's the Nasdaq QQQ up here. We had the big sell-off of course, from the February high to the April low. Of course, a lot of the trends, of course, had already showed you as the things started to break in here. Bottom indicators are the DMI lines, the directional movement lines. The red crossing the blue is not the start of the downtrend yet until when that crosses that we close below that low. So that was saying the bears took control on a close under the February 21st low around 526. We close about 520 the next day. So bears are in charge there. Any bull signals are getting exited here, and you can see that now they stayed in charge. We broke the 200-day, of course, then retested it, and that yellow line there is the 200-day simple moving average. And then just a daily chart focus here today. Then, of course, things were just really plummeting there. And you say, oh, but we reversed. And you say, well, if you're, say, a directional movement line follower, we're going to talk about these other indicators in a minute. But just a classic directional movement line follower would say, okay, well, now we got to cross up here, but we've got to close above that high. The May 1st high was a test. The bulls trying to take the ball back to positive DMI above the negative, blue above red. The green line's the ADX. That's your stronger trends when ADX is rising within the directional movement context. We close above that high the very next day. Even though we're just underneath the 200-day, technically from a directional movement perspective, the bulls have retaken the ball. You see, we got one test. The other direction didn't break that low from May the 6th. 478 was a low. That was also our big trends bands low. The upper white line is what we call our big trends bands. You can see that's in conjunction with the percent R, the Larry Williams percent range indicator. We like to see, remember I said unconventional thinking. We like to see something go overbought, a market go overbought, a stock go overbought, and then keep on going more and more overbought, right? Because let's face it, you and I as individuals do not drive the market. It's the institutions that drive the market, right? They want to pour in more capital when things are working. And of course, they're starting to work there again in May, right? They weren't working late February through early April, right? Even if you caught that incredible one-day wonder rally there on the Trump warning, it's a great time to buy, and we got the almost 10% rally in a day, but the point is it retraced most of that over the next couple of weeks, right? We weren't out of the woods officially until we started to see these other things start to cross up. Then as we stay above that upper big trends band, which equates to about the 80% level on the percent R here, staying overbought, you see, we got a test underneath that band here at the start of August on the weak jobs number. That low had to hold, and it did initially. You can see we rallied on up to a new high in the Qs as of August the 13th high up to 583. Remember, the buy signal started at 488. So almost 100 points on the Qs to the upside, more than 20% rally after telling you to get out of the way, remember, and avoid a big part of that drop from about 520 as the bear signal down to a low at 402, right? A 20% drop. So it caught, 20% drop, it caught a 20% rally. But what's happening now? We just had the breakage this past week where there was another retest point that should have held. The percent R came back underneath there. We also look at the CCI, the Commodity Channel Index. It's another thing that should hold. We held that August 1st low, but we did not hold the low here from August the 19th. You can see that yesterday, that low was 568 2 days ago. Yesterday, August 20th, we closed underneath 568 at 566 roughly, right? So even though we tried to retake it intraday here, or maybe a little bit, not too much, that basically that uptrend is over. Even though the DMI line said that the low yesterday could be a support line around 559, we've lost a super strong trend mode. The super strong trend mode was from that percent R breakout, followed up by the CCI breakout mid-May. Those lines were all saying power uptrend. that power uptrend is over. It's not saying you should be bearish. I would only be saying the bulls have they have lost the ball and the bears have retaken the ball if we close under yesterday's low for the Qs, looking at that DMI directional movement kind of basic trend line. Okay, so that means that a close under 558.84 would be the bears taking the ball from the bulls. We're not there yet, right? So 560 in general looks like kind of a big level, but watch yesterday's low. You can do the same analysis with any vehicle, the SPY, same way, S&P 500. It didn't quite have its DMI line, what I call a DMI kiss, since the August 1st low, which was 619. Didn't quite get there yesterday, but maybe in the next couple of days as we kind of oscillate. The low yesterday was 633 or so. Might need to go a little bit lower than that. We're not quite there yet, but still the bulls have been in charge, right? We had another DMI test back there, June the 20th. That low held as well. Of course, that's super strong uptrend mode. You see that super strong uptrend mode also looks like it's ending ever so slightly. We didn't hold 638 and a half 2 days ago. We closed yesterday at 638.11. That's a violation on a closing basis that says get out of the super strong trend bets, right? So if I'm buying options, buying calls, I want to be in super uptrend mode, right? I don't want to be in slow boat uptrend mode. So we start to get a little more cautious in when we start to see, at least in terms of the aggressive foot on the accelerator, foot on the gas type of approach, starts to moderate and say, okay, now we're going to probably have some little bit choppier conditions. Kind of makes sense given that we're getting towards the end of August, September being one of the historically weaker months is actually, I think, the weakest month, even more so than October. A lot of people think of October crashes, but that still doesn't make October as bad as September historically. So, but we don't trade off of that as a general guy. We're saying let the charts tell the tale, right? You wouldn't want to sell in May and go away, as the old saying goes, until the end of October, and then have sold here at the end of April at 554 and a half and left. You can see almost what 90 points or about 16 to 18% rally on the table, right? You want to still follow what the charts are telling you. So that's the guide. And then we can do the same thing across any analysis. So we're going to look at, so what makes the percent R change colors, says John L. We look at typically, you can see that when it's stuck in the middle of the range, it just kind of goes white. We should probably have it colored green here actually, but most people say it's bad when it goes overbought. But you can see it's just kind of going to those, when it goes to those extremes in the white zone, it's usually kind of a no man's land. We actually say when it's colored like that, we want it to be in that strong uptrend mode where it keeps making higher and higher highs. Because percent R says, what's the range? We're looking at the last 30 bars here, last 6 weeks or so. And it's saying, hey, if we're at the top of the range, it's saying, well, we're about the 90th percentile, the almost 100th percentile. That's as high as it can go. You say, well, but that shouldn't that be a sell? Well, no, if we're going to keep making higher and higher highs like we have been, that range is turning into a trend, right? The percent R turns into percent T. And that's kind of how I tongue in cheek call it percent T, but that's exactly what I want to trade is the unusual, unexpected, strong trend moves, right? I want to leave the chop in between those ranges to everybody else. For CCI, it's above plus 100 for bullish phases, below minus 100. You can see we got that minus 100 breakage in here. Then got a retest of that line and right into those 200-day resistance highs around 575, and then got another whack down almost 100 points down on the SPY over this next couple of weeks. So the point being that, okay, we're looking for those big moves. We're not messing with the little moves. So KKR is one that Barry asked about. Great to see you, Barry. So it's come back to the 200 days. You might be thinking, hey, isn't this a good time to buy? And by the way, this buy signal that's happening here is based on a breakage of an 80 bar Bollinger Band with two deviations on a daily chart. So it's saying, okay, it's doing something unusual, okay? And that's something we look at is that, from a longer term trend perspective, it's probably a pretty good buy the dip if you're a longer term trend follower. If you're looking at the shorter term trends like I'm talking about here, I don't like it for short-term call buying, for example, because we should have held that low on at least on the DMI lines, like we did the August 1st DMI test. Should have held that next one here on August 18th, 140.42, and we broke it a couple days ago, 139 or so. Even though it's holding the 200-day, I'm not saying I'm going really bearish. The DMI lines are going bearish. You can see our percent R is also kind of losing. It's actually going into a bear mode under the 20% level. If we close under that 138.39, we did yesterday. I don't like to take bearish bets like that if we haven't broken the 200-day. So I line all these things up. We've got conflicting things happening. The longer term time frame still looks good on the 200-day. the what I was just talking about the longer term band breakout signal, and then saying, okay, that last time that happened, you can see we go back a little further on KKR. It was a really good one, right? We had a great signal back there, June of 2024, and it doesn't get out until we have a violation of, in this case, the 80 bar simple moving average, which is the light blue line, which happened there January 10th of this year. So from a buy signal back there at 98, it went to about an exit of about 141, 140.93 officially. So, and it didn't rebuy because you don't get a close back over that upper purple band. We tested, we're making new highs, but not breaking and closing above there. So close, but that keeps you out of trouble. And that's the case with a lot of stocks that you saw. Like if I looked at Microsoft just for a second, as a great example of that. Microsoft, as we know, has had a great run, right? But the great thing about, look at the prior signal, not just the signal that it's on right now, which you see, yes, Microsoft's coming down. Yes, it just had a DMI test yesterday. So if it closes under yesterday's low, it would say that the bears are taking some short-term control over the bulls. 504.44. We were below it intraday this morning. Now we're back above it, right? We see that all the time on the daily chart. You got to wait to the end of the day to see who wins the war on any given bar on a daily chart. If you're looking at hourly charts, you wait for the end of each hour. You don't want to overreact to intra-bar activity. But what I wanted to point out is that, yeah, it's been a great move on Microsoft from the buy signal on the bands was 449 and it went up 100 points to the gap up on the open on the earnings, which I'm a big fan of taking some windfall profits on big gaps like that. Even if you only take partial profits, that's a nice position to be in when it gaps to 555 and you see that was the high. And now we've lost 50 points or almost 10% in the last several weeks from that early August gap up, or last day of July, I guess it was. So the point being that I want to show you a loser though. So losing trade here, you got this band breakout. Everything looks like it should be good. And Microsoft, by the way, we look at history. This is TradeStation. We'll look at history on a band performance graph, and you say, okay, remember, past performance is never a guarantee of future results, right? But it's been working on Microsoft, and we look at things like the performance summary, and we see that, okay, it's only been right 47.6% of the time. You say, well, that's not a good system if it's not right more than half the time. It is if it has a ratio of average win to loss in this case 2 to 1, right? You win twice as much as you lose. It's almost like flipping a coin and winning $200 when you are right and losing $100 when you're wrong. You would want to play that game all day, any day, right? So the point of it is it's made good money. It's had a good, what we call profit factor. We look at the combination of those size of win to loss and the percent profitable together. So the Microsoft's been good, right? And you say, well, you get a good signal and you say, okay, then you get a signal. We won't call it a good signal. We'll say you get a signal on a positive expectancy like that at 437 and it starts running to 455 and you say, okay, should I take profits? We're into old resistance. Well, we don't think like that. In this example, we're saying, look, you give it a chance to go, right? And you say, well, this one does not go, right? You're in at 437.4. The exit is 424.83. So on that particular one, you say, well, I just lost from 437 to 424 roughly. So I lost 13 points, about 3% on the stock, right? Always convert it back to percentages. If you lose 3% on that one, you say, okay, well, what have you made on this one, right? From the entry just under 450 and it ran to 550, right? You should have been taking some profits off, like I said, into the earnings gap. But even if you sold half there and you're still on half, maybe you're looking at 525 as a net average current effective exit price right now. If you sold the other piece, well, you say, and we're not out yet on that other piece, we let it keep running. But you say, okay, well, that still would be about a 75 point move on 450, which would be about a 15% gain. So not quite the 20% or more, 25% type of run that it had up into the earnings gap, but saying, okay, still, if I made 15, I lost 3, that would be a 5 to 1 reward for your risk, or what some people call an R multiple of 5, meaning you're making 5 times your risk unit. Obviously, 3% is just the last one. You can measure each one here and say, okay, same one before that. You say, okay, well, this one also lost. You in at 441, out at 418, right? Lost 23 points, closer to even not quite 5%, but if it was 5%, right? Even okay, so if you lose 5, you make 15, that's 3 to 1 relative to your risk, right? So you have to kind of think in those terms of I'm going to win some, I'm going to lose some. The key is I want to win bigger and I want to lose smaller, okay? So I saw before and that there was a request on Intel as well. And I want to point out Intel here. It's an interesting one to a degree here in that, as you know, Intel has been a laggard for quite a while, right? These last couple of signals were not good. But this latest one here, we did get some follow through. Those last two did not follow through off of those initial buy points. I like to see it close above that high to keep being willing to add to a position or say that we're getting some kind of follow through. Initially, we closed above that first high 24.20 the very next day at 24 and a half last Friday. And you see, even though it was a red candle, we closed above it. Then we're back below, but then we're back above it here on Tuesday, back to 25. And now we got whacked down yesterday to 23 with the tech sell-off, right? Remember what I was just telling you about percent R retests and CCI retests, right? We're coming in for those retest zones. Actually, today is a CCI retest. Yesterday was a percent R. But what I'm also looking at, the green line, the ADX. ADX started to turn up. We started to trend up with the positive line above the negative. Then we bent down yesterday. That bend down yesterday, and you could say again today, kind of also testing, is a crunch time level. Yesterday's low was 23.33. Yes, we were below it intraday some today, but we're back to 23 and a quarter. I'd love to see it hold 23 and a third at the end of the day to really give me confirmation that that bend down on the ADX yesterday. I watched that bend but not break kind of pattern. If it holds, we're okay. If it bends like it did back here in February or March, and then you see it break that and close below it, that's no good, right? You want to see that it's trending, right? So you go look at a name like Nvidia, of course, a big market leader, right? And Nvidia, of course, had that the semis had kind of lagged a little bit last fall, right? We'd had an incredible run up. If you see back to the incredible run from that signal in late 23 on Nvidia near 49 and two thirds, ran all the way up to 140, right? Gave the final exit there as things started to break back in late July at around 103 for more than a double in less than a year, right? The next signal didn't do anything. You can see in October, right before the election. You'd think that the election news, we get that initial rally in November on the election, but you see then things kind of drifted off, right? So you're in on that one at 138, you're out on that one at 130. So you lose almost 8 points or what, about 5%, 6%, let's call it 6%. So you say, okay, lose six after making 100, right? Well, look at this latest signal. And again, you would have missed all this chop after you're out, all this sideways chop. Like the Microsoft example I showed you from the prior signal, it would have helped you miss the spring swoon that we had this year, right? But you wait until it's all clear again. You know, here we are. You say, well, gee, that's obvious. It's breaking out above the old highs. I'm saying I got to get through that band to tell me there's enough power there. That was at 154 and a third. And then, you know, we ran to 184 and a half. And then we just got whacked back down. Now remember, this is our trailing stop on the longer term signal is the blue line here. But if I'm looking at my ADX, look at how beautiful that ADX was. It was even in before the band breakout, right? But again, the band breakout's where you get more speed confirmed, right? So we're going up at a slower rate here. And then look at how you can almost draw one trend line here. We're going up at a slow rate here, and then we go to a faster accelerated rate here, right? I'm not going to draw up the charts, mark up the charts there, but you see just a slower rate here. That's not going to make you a lot on NVIDIA. This speed here after the band breakout is much better from late June into late July, right? That month is going to look really good for your call options purchases and compared to the May early June phase, right? But now where are we? You see the when the ADX bent right there on the 722 July 22nd pullback, that was a key low. It needed to hold at 164 and a half. It did. We quickly popped back up to a new high at 183. And then it bent again right here on August 1st on the jobs data, right? So that's another key bend point. It's holding initially, that was about a low of about 171. We pop up to a marginal new high, but where did it roll over again? Right about there. That next low, you keep tightening your stop this way, you see? So that low is 179.46. We actually closed below it on that breakage a couple days ago on the 19th, back on Tuesday. So that's a violation from a ADX really good trend following perspective, even though you see technically it looks like just another retest on the percent R, right? That last percent R retest though was see 171. Then we just had another retest there, and technically it held. It came back and closed slightly positive yesterday, or well, I'll take it back. It broke it by 9 pennies Okay, so technically that's a violation, even though it's a nice looking reversal. You could say that I'm not bearish on Nvidia. Remember, they have earnings coming out this coming Wednesday after the close. And I'm saying, okay, right now you'd say from a longer term trend followers perspective, the DMI test point, it was an inflection point. Yesterday's low will matter at 168.8. But what I'm saying is, I wouldn't be surprised to see some backing and filling in front of the earnings before we get the next reaction. And that's not really what I want to be buying in front of earnings into, right? Into sideways chop or consolidation. We'll probably test 180, which is our upper band now resistance now that we're underneath it. We'll probably test that 180 zone on the upside, but we could test back down to 169, maybe even that low band 166 and a half. We could bounce around here over the next uh, 4 sessions or so, right? And or 5 sessions counting the Wednesday action before the after the Wednesday close report. Right. So that's something to pay attention to. So to me, I'm not saying I'm bullish or bearish on Nvidia here. I'm saying it's a bit of a now indigestion, digestion phase, not indigestion, digestion phase of the prior gains. Something like what happened back here in November, December, where you chop back and forth. You don't have any kind of a no man's land in the percent R trading to the oversold, back to the overbought, but not getting the strong follow through either way. And that's kind of what I'm expecting in the short term here. And then the earnings, of course, will be very important. CoreWeave, which of course isn't a big NVIDIA investment, it's been all over the place, right? This is where you can see a beautiful percent R trend, right? You get outside of your big trends bands, which that's what that's designed to pick up as we finally got 30 days of data after the IPO, right? Which happened back there March 28th. Kind of chopping around. We want more data before we can trade it. But you see now it's breaking out, confirming right there May 13th at 63, more than doubles to the eventual high up there at 187, right? But you see all these retest points, which are basically the band retests. They'll show you like that white line, holding that white line a little close underneath it doesn't concern us as long as it doesn't close beyond that. It's like this one here that closed underneath it right there. We had to hold 157.9 and we just ever so slightly lost it at right there, 155.94. That would be your exit at the July 1st close. Okay. Why don't we get back in? Because percent R tests back into that upper band level. It got close to it right here as well, but it doesn't follow through above that. So that's just like a now resistance level. You say actually it's kind of gone the other way where it's broken. Our DMI lines are a little bit net negative here. We're kind of steering clear. Obviously, you broke a lot of support there around 100, kind of tested back into it, failed there. I'm not saying you could go look at an hourly chart and maybe pick up a bear signal here on the 60-minute chart here now on the left. And so you could say, okay, maybe there was some bearishness, but now it's kind of losing that decent ADX trend. The better ADX trend was right back here. When ADX starts to cross up off of a low level, you see we'd gotten a bear signal on our bands here, breaking down our percent R, our CCI both breaking down. That gave us a short right there and said go from about July the 23rd into that profit target taken July 30th, right near that day's short-term low. We were maybe a few hours early on that profit target, but you see, get you out before the gap up the next day and then the eventual reversal back. Obviously, this next short didn't follow through, right? We want to see continued follow through off of that short signal, like I said before. So that 104 level, 103.85, didn't quite close below there early August 4th. So not getting the follow through versus you got that follow through the next couple days on CoreWeave. July 25th, breaking a new lows. That's where you can add or build more of a position to get follow through on a trend continuing to work the way you think it's going to work, right? That's really important. So as you look at these, you're saying, okay, this is all about it. Now pop in any other symbols you want to look at in that chat. I'll seek to get it covered. But of course, a big one is Apple, right? Apple has been dead money for a while and then had its best week in 5 years here in early August on this huge surge up. And so again, when you look at it on an intraday chart, you start to see like there's your ADX cross the morning of August 6th. There's your percent R breakout and then some follow through right after that. And then CCI comes on board a little bit later, breaks out there at about 220 and a third and closes above it later that day. Even the start of the next morning on August 8th. All indicators are bullish there with the band breakout as well at about 222 and 2 3/4. And then you see we steadily stay overbought and keep trending. And that's something you want to keep riding. And you see the ADX when it slightly bends right there in that little morning pullback, it's right into our this is the hourly chart analysis. So this is more of a swing trader's view over about a week's holding period or so. So I see that pullback there. I say that low's got to hold just under 225. It does. We grind back to 230. We make new highs up to 235. And you can see then we get another roll down in the ADX, and that's going to tell us to hop out when that ADX rolls over. And then we close underneath that low. It's about 230.8. Took a little bit of time there, but it violates there as of the morning of August 15th, last Friday morning. You can see we're losing that percent R, staying in that overbought territory, right? As it goes from red to white, we're kind of losing that solid, breakout phase. Even though the DMI lines are still hanging, you see now things are just really choppy, directionless, and now it's kind of gone the other way on the hourly chart where we sort of break down. And so obviously daily chart looks like it's just going through that bend from yesterday's little pullback in the ADX. See ADX rolled over right there. That low yesterday was 225.77. We're about a point below it, but still, of course, if you're a daily chart follower, you got 3 more hours to wait to see who wins the war by the end of the day. Technically, that was a retest on percent R. Our CCI still looks like a good breakout. We had our bands break out and then followed through right away above the 200-day. It's been many months since Apple's been above, the 200-day, right? Back in earlier March, it had been above there and got the breakage below. And you see, there's been dead money compared to tons of other opportunities elsewhere, but maybe now getting a little bit more of a flight to safety. If it could reverse and close back above yesterday's low, I'd feel a lot better about it. 225.77, the end of day number. I want to see it get back to or above. So watching that very closely. And man, time flies. David says I got 3 minutes. So basically, let me just that means we're having fun, right? What about Robinhood? Look at that beautiful daily chart. Okay, we're going to focus on the big picture here. And of course, two huge prior signals, right? So you can bet when you look at your strategy performance report, right? It's not even going to count the open position. You could go add that in later if you wanted to and say, look at how many points you made. But you go back and look at the history on Robinhood. Of course, it's bolstered by that big win-win. But look at that profit factor, right? We haven't had a ton of signals, right? It hasn't been around that long. And you say it's just a 50% win rate. The profit factor is almost 8 to 1. That's driven by the fact that your ratio of average win to loss is almost 8 to 1, right? And so that's a perfect example of it being a 50-50 win rate, that's what makes it for such a huge overall success rate because of this monster win. This is why you want to have a plan to get on these and not get shaken out of them by a quick 1 day pullback, right? That 1 day pullback was a retest on all the indicators I've just taught you about here in this half hour. Classic pullback. Well, where are we now, right? We just had one of those. It looks like on this pullback that happened in August, right? That pullback hit. Then we had another one of those that should have held that 107.25 level. You see that yesterday we actually lost it. We held it the day before yesterday, but yesterday we closed under 107.25. I never lower my stops. So yesterday's close at 105 1/3 is an exit. Okay, it's sad, but yet still pretty nice given that you got the buy signal at 62, getting an exit at 105 off of a high up there at basically a doubler, right? The other thing I just want to mention as I wrap up is that whether you trade options, whether you trade stocks, one of my core rules is if you can double anything, sell half of it at a double, get your risk capital back on half of your position. Now you have a free trade. Now you can do whatever you want. You can let it run till the cows come home if you want. If you think it's the next Nvidia, the next Apple, multi-year winner, fine, hold hood as long as you want. But the point being is that now you have no risk. If you bought it at 62.5 and you sold it at 115, and you're going, I love being in a risk-free position. So I am out of time. I'm going to hand it back to David so he can get you on with our next great speaker and trader. And thank you so much for having me, David. If you've got any questions for me, you can always reach us at bigtrends.com. Check out our website or call us at 800 Big Trends. We're here to help. Back to you, David.
Thanks, Price.
Thank you.
Actually, our next analyst is not in the room yet.
Want me to keep rolling until they are?
If you don't mind, if
That'd
you
be
want to
great.
look at a few more things.
My
Yeah.
pleasure. How about Goldman Sachs? I missed that one from Synergy Hedge. Let's see. Goldman, right? Still, you can see another one of those where it had a great run in October, right? And remember, we're using the 80 bar moving average. That's a longer term system. I'm going to obviously supplement that if I'm a short term trader with a lot more fine tuning so I don't give back so much for my short term options trades. But obviously, we're trying to define the broader picture here. I would have felt better about Goldman if these big trends bands retests it was having had held. You see, we were hanging in there. That last retest, you can see on the white band. When we close under the white band, that's my next key low to watch. So that was the August 15th low, and another way to look at it is if you see the percent R close back under the top 20% of readings. By the way, we use a positive scale in percent R, 0 to plus 100. Just I call it the grade school scale. It makes more sense to me. Larry Williams uses a negative scale from a 0 high to a minus 100 low, but the principle's the same. Top 20% tend to be your best trades in my experience, by staying with those retests that are successful. When it closes underneath that low, 729.18, we're gone. And so the exit there was actually 721 and a third back 2 days ago, right? So now it's kind of back into that stuck in the mud. Yes, the DMI line just had a test yesterday and down near that lower band, right? So if you're just a channel trader, yeah, you could say that maybe 703 holds and maybe we go back to 737 or so. And you say that looks like a tradable move. I want you thinking bigger picture. I want you unbounded. I want you trading outside of those white bands. That's where you get the big opportunities, right? So you go back and look at, I mean, there's just so many examples, right? We can go on and on about all the quantum stocks. If you're following Rocket Lab, if you're following Ion Q, right? You see the insanity that those stocks did last year, right? Our buy signal on Rocket Lab on the bands, you can see back here, was $4.91. It eventually went to $33. But you can see how the percent R, and especially like the CCI staying overbought, retesting, and holding. When it finally lost it actually lost it back in here in the mid 20s, right? So you can see that that one actually didn't quite get all of that move. We're not gonna expect to get 100% of the move. I always say the sweet spot's the better part. But look at that last buy signal on Rocket Lab, gave the buy in June. And that was, as the market's kind of recovering here. And you see, we come into this like key kind of a retest zone here. ADX starts to bend right at that short-term low at about 25. You say, hold on, I'm losing it first on that trade, right? With some of these volatile stocks, you got to have a little wiggle room, right? You're in about 29 and you go, oh, it ran up quickly to 32 and three quarters, and then bam, it's at 25. I went from up a few points to down a few points. That's a nothing kind of a signal yet, unless it had closed under that blue line there, which is the longer term exits. You got to have some wiggle room. That keeps you in the game. Remember what I said about doubling anything. In this case, it goes up here to about 53. You don't quite get a double. And you can see it's now settled back down. And of course, we've lost some of that support. But the DMI line just tested yesterday at that intraday low. And before I'm done, tell me if I got to stop, David. Just jump in and I don't mind being interrupted. Got to talk about Palantir, right? What an insane mover it's been. Obviously, incredibly volatile here recently. My pleasure, Synergy Hedge. Look at the incredible run. When you're right, you cannot afford to take small profits and leave a ton of money like this on the table, right? That buy signal July last year, 27 and a quarter ran to a high of 125, five bagger almost. And yes, the exit was more like a three bagger at 76 and a third, right? By the time it came down there in March. But you see, get you back on the horse here, 124. You can't be shy about buying back higher, getting on the next wave, right? And again, 124, you get a quick fake. That was an earnings pop back to 102, 105, right? Initially, you're like, oh man, I got the negative gap on earnings. But you see, it was a one-day wonder pop down that rallied back up quickly. And again, following the technical indicators has kept you on the wagon here to 190. And then you go, oh no, we just went to almost 142 yesterday from 190. You've got to have a strong stomach with these.